A very good evening, everybody. Welcome to tonight's Phillip Futures webinar held in collaboration with Trading Central. US stocks hit record highs, which sectors hold opportunities? I'm Ming Hui from Phillip Futures, and starting off the webinar tonight will be Ms. Dominica. She'll be doing a brief introduction to Trading Central and the Phillip MT5 platform. After which, we will hear from Mr. Ming Lam, Deputy Head of Research at Trading Central. He'll be sharing with us his observations of the latest stock market trends, as well as how ETF CFDs can be used to capture these trading opportunities. Before I pass this on to the speakers, I'd just like to inform you that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a live Q&A session towards the end. And now without further ado, let's have Dominica speak to us.
Hello, good evening, everyone. My name is Dominika Wach, and I am a client success specialist based in Cyprus, who takes care of Phillip Futures and Trading Central day-to-day relationship. Today, I'm here to tell you more about the Trading Central services available on Phillip Futures MT5 platform. Let's start from the indicators. So if you go to the navigator window, under indicators, you're going to find a Trading Central. If you click on the plus, you will get a couple of indicators available for you. The one that is the mostly used is the analyst views that you can see now on the chart. It basically shows you the support and resistance levels and the pivot line. We have also other indicators, as you can see, the adaptive candlestick, divergence convergence in a couple of versions. So according to your needs and your educational level on technical analysis, you can use the different kind of indicators. The next thing I want to tell you about is the analyst views, also reports prepared by our analysts, which are available in the news section. So if you click on the toolbox news tab, you will get the different news articles, and the one with the category Trading Central are prepared by us. So if you double click, you will get the pop-up window with the report on the specific instrument. You get the chart and the description with some, of course, with our preference scenario, alternative scenario, commentary, support and resistance levels. And those are updated on average every 2 hours on the major currency pairs for stocks, most probably once per day. Another tools that are available for you are under expert advisors. So if you again click on the Trading Central tab, you will get another pop-up window. You always need to just make sure that you allow DLL imports. So always please make sure that you have this one ticked. And then when you click OK, it's loading the window with two amazing tools will open. So the first one is the featured ideas. It's the tool that is purely based on technical analysis. Actually, it is based on something that it's called technical events. I will tell you just a bit more about it. We have highly scaled, globally distributed infrastructure to run our proprietary algorithms, and those algorithms analyze tens of thousands of financial instruments continuously as a new price bars form. And we are looking to identify what we call technical events. So a technical event is a moment in time when a technical indicator has triggered an insightful signal or a chart pattern. And this has formed telling us that the price situation is changing. A bullish event is a sign of strength and rising prices. A bearish event is a sign of weakness and anticipating of falling prices. This event-driven model saves you a lot of time and delivers information that is very actionable. And for the future ideas, what is excellent for you is that if you are intraday traders and you are looking for some idea what to trade, you can just come here, and based on your criteria that you can set up here in the custom settings, you get 10 bullish and bearish ideas on different currency pairs. So if you are just looking for some tips, this will give you some direction. How to customize the setting? You just click on custom settings, and for example, you can look for specific currency pairs, but this way you will limit your ideas, so the algorithm will not scan the whole options available. But of course you can do it. But if you are just, for example, wanting to narrow your criteria, you can do it by the bar sizes, holding time frame, and if you are interested in particular charts or technical events, you can do it as well. And note that every time you change the criteria, the top 10 ideas will be different. So now it will refresh the page and you will see different ideas. And when you can see, for example, this kind of pattern, which is a classic pattern, is a very strong sign here for bullish, you can see. That's another one. Additional, we have some educational bits here. So if you just hover over your mouse, you can learn more about the specific pattern that was found by this tool. So feature ideas is a purely technical analysis tool. And when you are looking for some fundamental analysis as well, and you want to read more about what's going on in the news, we offer you the TC Market Bus. I've talked about it in the previous webinars, so I hope you are familiar with it already. But if not, it's just this quick overview. You get the dashboard where you can see the bubbles with the most talked about instruments. As you can see, the Bitcoin with the biggest bubble is the most talked about asset currently. If you just hover over the bubble, you will see how many publications were published on the specific asset. If you click through, you will get to the dashboard of the asset, where you can get some more indicators. Here you get the split between the news and the social media publications. You get the orientation, is it positive, neutral, or negative? You get the news volume, like currently is average, the most discussed topics, and the history volume. So below that is the newsfeed, which is dedicated just to the crypto and mentioning the Bitcoin. If you are interested in reading the news or customizing your news, you can do it here in the news desk. Here are the latest news. You can also customize your feed according to your needs. I showed you that here I have a feed just dedicated to Singapore. So feel free to use those tools. Talk to your account managers in Phillip Future. On the website, on Phillip Future website, under investors and platforms, you get more information about introduction to Trading Central indicators, introduction to Trading Central Market Bus. So if you just click here, you can read more about those tools. And also download the plugin, request the demo, and enjoy the Trading Central services. That's it from me. Thank you.
Hey, hello. It's okay. Hi. Hello.
Yes, we hear you. Hi.
Okay. Thank you, Ming. And I'm also Ming. I'm Ming Lam from Trading Central, Hong Kong. So, welcome, friends of Phillip Futures and Trading Central, ladies and gentlemen. Welcome again to this webinar. It has been a month since we last met in end of May. So over a month, something has happened in the market, and I want to show it to you. And well, in fact, I have received several complaints that I will make it concise and to the point, and I hope you will enjoy it. Okay, and more importantly, you will find it useful. Okay, ladies and gentlemen, let's start.
Hi, Ming. I think you have accidentally muted yourself, so we cannot hear you.
Oh, is that okay now?
Yes.
Okay, sorry for that. I think that the panel is over here, should be here. Okay, sorry. Okay, let's go ahead. Okay, now today I will talk about some US stock sectors, and I think our friends at Phillip Futures have done a very good job. So they have just introduced some more CFDs that are corresponding to ETF. Okay, so those ETF, they invest in sectors, different sectors, and I will show you, and different companies in different sectors. So if you are bullish on some sectors, you can leverage using the ETF to invest. Okay, I mean to express your view on the sector. For example, if you are bullish on the tech stocks, you can easily find a technology stock ETF and a corresponding CFDs here. Okay, so now as usual, I will jump into the macro economic background, and then we zoom in to sectors and then zoom in to some stocks. And at the end of the session, I will discuss one frequently asked question. Okay, and I hope you will find it useful. Okay, now US economies, not bad. In fact, it's not bad. The initial jobs came the last week number 411,000. So you can see the downtrend here. Okay, after last year's pandemic scary surge in jobless came, we are now almost back to the pre-pandemic level. Well, you will notice that nowadays we always talk about pre-pandemic levels. Okay, for example, we will see oil price at pre-pandemic levels, jobless claims at pre-pandemic level, something like this. Okay, now you can see jobless situation is improving. And this one, consumer price in the CPI, it has caused a lot of headlines in newspapers. Why? In April, we have a 4.7% year-on-year growth, 13 years high. And lately, we have CPI year-on-year growth 5% in May. Okay, also 13 years high. Okay, so this leads to what? This leads to inflation expectations. Okay, now this is the Fed funds target rate. That is the key interest rate in United States. Okay, it is still at, well, 0.25%. Okay, they have a range. They are doing it in a range. It is called 0 to 0.25%. Well, mind you, 0.25%, there's still room to decrease, right? Of course, there are a lot of room to increase. Okay, so it has been held there for, well, over a year at this level. Okay, so maybe you will ask a question, and maybe you are noticing a lot of news stories about inflation, about the Federal Reserve increasing rates. Okay, just like here, just in the middle of June, maybe 2 or 3 weeks before. Okay, the Federal Reserve of US say their projection, now listen, their projections so that they will increase rates at least 2 times, not this year, not next year, but in 2023. Okay, 2 years later, their projections. Okay, listen very carefully. Okay, and how about Jerome Powell? Fed chairman said, he said those projections need to be taken with a big grain of salt. Okay, means don't take it very seriously at the moment. He keep, after this meeting, in several circumstances, he keeps telling investor, keep telling the market that the situation, the price increase, the CPI price increase situation will subside somehow as the time pass. Okay, now we can see that the Fed's tune is they keep telling the market that inflation pressure is transitory. Okay, it means that it will die down over time, but their projections is that they will increase interest rates in 2 years' time. Okay, what do you think? Now, I think this webinar is not just me talking all the time. I will stimulate you with questions. I hope you will think about the question, and you don't have to give me the answer. You give the answer to yourself. Just ask yourself, will the Federal Reserve increase interest rate really? Oh, okay. Let's go forward to see. Now, this is what I saw it in every webinar. I saw it in every webinar. This is the 10-year Treasury yield of US. Okay, US Treasury yield, 10-year. This is the benchmark of Treasury yield. Okay, 1.47%. And mind you, in 2018, we are at level about 3.2. And now we are 1.47. Okay, and you can see the trend is not going up. The trend is well, it is to the downside. This tells you a lot of things, and you have to pay attention. Okay, what this Treasury yield, 10-year Treasury yield, is telling you? It is telling you that growth, economic growth, will not be as splendid, as great as you think. Okay, I repeat, this 10-year Treasury yield is telling you that its trend is not it's quite subdued, I can say. It is telling you that at the moment, the forward-looking growth, economic growth of the US is not very positive. Is that clear? Okay. So combined with this one, I ask you another question. Now, well, for the past 2 webinars, I told you, well, US launched 1.9 trillion relief package. Okay, big T, trillion. And then they are now talking about 2.3 trillion infrastructure plan. I ask you one question. Is it the end? Is it, okay, our stimulus stop here, no more. We are not going to print any money. Okay, so economic growth will pick up and we don't have to worry anything. Do you believe that? I give you my answer. I don't. Okay, we foresee that such kinds of stimulus package, such kinds of stimulus measures, handing out cash, handing out check, will carry on. Okay, will carry on. That means they are probably will keep printing money. Still remember this chart I showed you last 2 times. Okay, this is the flat M2 money stock, money supply. Okay, now it is discontinued. It means the central bank, U.S. central bank, the Federal Reserve, is no longer publishing this information to the public. Okay, this line, just last year, they printed 30%, 30% of the whole money supply last year. Okay, do you think now they stop reporting to you these figures? Do you think this figure will be on the upside or on the downside? On the upside, of course. They will increase. I can say they will keep increasing. So what is it to do with our stock market view? Ladies and gentlemen, well, this is not the end of the webinar. It is a conclusion I can draw at the moment. We have to watch if the inflation pressure is persistent, or just like the Fed chairman say, it is just transitory. Okay, the inflation pressure will die down somehow. As I told you, the 10-year Treasury yield has shown you that the economic growth prospect of US is not very rosy. Okay, so we have to watch. Inflation pressure will build up or die down. If they keep printing money, where will the money go? Capital flow. Okay, and I can tell you, we are still bullish on US stocks, just like the conclusion we made last time. And the following point, I want you to think about it. Tech stock, for the past several months, we see a correction. I can just say a correction, or no, it is a consolidation. It is maybe less than 8% consolidation. So now, as I showed you, the interest rate, the 10-year US Treasury yield has shown no tendency to rise further. Will the tech stock make a comeback? I mean, to rebound. Okay, you remember for the past several months why the tech stocks, well, they post loss. Why? Because investors saw that the 10-year yield rose up. Okay, and they thought the tech stock, well, in terms of valuation, okay, tech stocks are overvalued, and they sold the tech stock for the past several months in view of rising Treasury yield. And now, as the Treasury yield is gets stuck in a range 1.4, 1.5, do you think the tech stock will make a comeback? Okay, let's have a look. I will go along with you to have a look. Now, I will show you some charts following. I will show you some charts, but I got to remind you as I did every time, technical analysis. That is, we read the charts and make some anticipation. It is a lagging indicator. It is a lagging price. It is not predicting the future. Okay, but we would like to see if we draw some patterns from the charts and to show some signal. Okay, whether it is entry signal or get out signal, exit signal. Okay, and this is the most important thing: is do not trade with TA alone. Okay, just like I have gathered all this macroeconomic background for you, you have to take also them into consideration, not just TA alone. Okay, let's start to the index. Now, US index, you can see. I think I have not moved the support. Okay, 33,000 for Dow Jones Industrial Average. I have not moved this support. Okay, that means the consolidation for the past, in June, I can say, has not breached the key support. As we are still bullish on blue chips, US stocks. As you can see, Dow Jones, the index, has returned to levels above both 20-day moving average and 50-day moving average. Okay, our first target for Dow Jones is 35,000, just near to the around the upper Bollinger Band here. Okay, fair deal, right? So after, as you can see, this is S&P 500 index. Okay, after I can say it is less than 5% consolidation. Okay, we have all those talking about inflation, increasing interest rates, blah blah blah, something like this. We are making record high, record close, record high, record close. Okay, now the S&P is tracing the upper Bollinger Band here. I have to raise also the key support to 41.64. So you can see this blue chip index has shown you that the market does not believe the Fed will increase interest rate. Okay, let the market tell you. The market is telling you this. Okay, now this is Nasdaq 100 index, the 100 biggest technology stocks. Okay, this is a slide that I showed you in the last webinar in end of May. Okay, at that time I said we have to see a break above 14,000 points at Nasdaq 100 index to reverse, to make a reversal. We call it a bullish reversal. Okay, a bullish reversal. It was close. In fact, it was close at that time. At that time when I was doing the webinar, it was 13,700. Okay. Several days later, yeah, I can say the correction or consolidation is less than 8%. It is normal in a bull market. In a bull market, a pullback, a consolidation of 8%, normal. Okay, now, not even 14,000. It has reached 14,500 level. Okay, this rebound is very remarkable. It's much more remarkable than the S&P and Dow Jones rebound. So that is why you have to come here for this webinar today, because I will remind you to have a look. Again, I will review of those technology stocks. Okay, now this is the background. Okay, the whole market background for US stocks. So what's next? I will bring you along with me to check some ETF, to check on some ETF price and see how they are doing in relative to the stock market. Okay, let's go. Year to date, that is from the start of this year to now. Well, today is July the 1st. Well, time just flies. Okay, we have passed a whole half year, 6 months already. So this is what I'm going to show you. This one is very interesting. So which one do you think will be the top performing sector, stock sectors? I mean, from year to day. Do you know what is a XLT, XLE, XLF? Okay, I'll show you. XLT is the retail sector. So we have the progress, very good progress of those vaccination in the US or around the major developed countries in the world. Okay, we are seeing people coming out. Okay, and well, it surprised me also when I see people cheering in a football match of the European Cup, maybe. Well, people say when the economy opens, we are seeing more and more people willing to spend. Okay, so this is a retail sectors. You can see it is coming quite strong. This orange one. So don't worry. You will find corresponding CFD in Phillip's website. Okay. Second one is XLE, E for energy. Okay. And then we have financial sector. Retail sector year to date over 50% increase. It means this ETF, these sectors, those stocks, those retail stocks in this sector are gaining, well, 50%. Okay, energy stocks 41%, financial stocks 26%. But I want you to have a look at this energy sector. Okay, its increase, its year-to-date increase has come down a bit compared to, well, maybe a week or so before. And also financial sector, XLF here, also coming down a bit. That is, they are still leading sectors, but maybe be careful. Their strength maybe decreasing. Okay, what's next? The next is SPX. Do you know what SPX is? SPX is, ladies and gentlemen, S&P 500. it is for comparison. So from year start to now, year to date, S&P 500 has increased, has around 16%. You can compare with other sectors then. So how about XLK? XLK is technology. Close. That's one point I want to bring it to you. Close. It means the XLK, the technology stock sector, is coming up. Okay, will it overtake again the S&P? In other words, will it outperform the market again? I think so. Okay, just have a close, just have to monitor it. Okay, now another one, XLV. XLV is healthcare. XLU is utility. Year to date 3%. Not very impressive. And this one, XBI, is biotechnology. Sadly, it is negative 4% from year to date. Okay, so we will focus on the first 3 to 4 sectors here from here. Now, this is a retail. Well, it is keeping up. It is keeping up quite well. As you can see, it's a daily chart. and it is now above both 20 days, 50-day moving average. And you can see the RSI is not overbought. Okay, we still have some upside. Okay, now XRT is the real stock code in the US stock market. Okay, there will be corresponding code in the Phillip CFD. Okay, next one, energy. I have something to say. So for the energy sector, so energy stocks, ExxonMobil, yeah, Shell, okay, those stocks are in this category. They have been doing well, relatively well, corresponding to the S&P 500. They are the leading sector because of one thing. Do you know what? Oil price. Okay, oil price now it is US oil price. We have another oil price called Brent. This is a US WTI. Well, over 70 is very impressive. Okay, now it is heading toward 80. So this is the basic. This is the base why we are seeing the energy sector, energy stock sectors is doing well. But ladies and gentlemen, I have to remind you one thing. It is this thing, US dollar. Okay, so you know what? US dollar index, we are monitoring this US dollar index very closely. Okay, because we call it the king of market, US dollar. It will affect stock markets, it will affect the currency market, of course, and most importantly, it will affect the commodities market. Okay, when we are seeing US dollar breaking out, if we keep rebounding, well, mind you, the US dollar index have been down for over a year, have been compressed, have been pressured for over a year. If we rebound and cross these major key levels, the rebound will be very amazing. And if you see a rebounding US dollar, you will see what? You will see weakening commodity price, including oil price and gold price. Okay, but today we are not going to talk in details about commodities. Maybe well, we schedule another one for commodities. But that's why I want to remind you, if the US dollar keeps strengthening and we see decreasing commodity price, including oil price and gold price, you will see corresponding weakening of those stocks related to oil price and gold price. Okay, that's why I would like to remind you of this factor when you are looking into the energy sector ETF. Okay, just be caution. Now, the next one, we have financial sector. Well, this corresponds to our previous news headlines about inflation, increasing interest rates. You know what? Increasing interest rates are good for banks. Okay, we see for the first half of the year, we see bank stocks rising, financial sector stocks rising. Okay, but recently the strength seems to be a little bit reduced. You can see that the 20-day moving average has crossed back below the 50-day one. It is not a very good sign. Okay, again, just like the energy sector, if you are looking into this financial or bank sectors, caution. Okay, so which one would you think would excel in the coming of time, maybe in the coming quarter. How about this one? XLK, K for technology. You see the rebound, just like the S&P, just like the last 100 index, the rebound has been amazing. You see, the 20-day moving average is providing support to the ETF, and even the 20-day has crossed above the 50-day. Very good sign. Okay, and also the relative strength index not very stressed at the moment. Okay, not stressed. Okay, so following, I will show you the comeback. If the technology stocks are coming back, have a look at some big technology stock names. Okay, Facebook, and it has broken our targets. I showed you last time. Okay, and it is still on the uptrend. Okay, as you can see, the 20-day moving average is good. Okay, and we have to raise our stop loss level to 326. Okay, so Facebook, well, I haven't checked. Maybe its market cap has already exceeded 1 trillion. I don't know. Maybe I have to check. But a very good rebound, not rebounding, a rally. Seems to be tireless, we can say. Okay. Another one is Alphabet. You see, just amazing. This uptrend, and it is still at this stage still hovering at record high levels. Okay. Google, well, Google, all those search, all those just like Facebook, the advertisement revenue, well, with the, you can see with the retailing industry, as I showed you before, the retailing industry is on the rise, and their advertisement income for Facebook and Google will be amazing. Won't you think that? Okay, so now, how about Tesla? Tesla make a comeback, I can say. Okay, have a look. It has broken quite a long-term declining trend line, and now it is on the move up. Okay, I do not see its share price at the moment is stressed. Okay, relative RSI is around 66. Okay, and you can see again the 20-day moving average, very good close above the 50-day one. Okay, so I will ask you one question. Have a look at this chart. Okay, have a look. Okay, I will ask you one question later. How about Apple? Also doing very well. Okay, have a look at this chart. I will ask you one question. Okay, I think you are very good now. You are very good at technical analysis. You don't need me to point out that all these good signal here. Okay, so you can see that all those big tech names are doing well these days. Amazon, you know what? It has also combined with the factors of the rebounding retail industry. Okay, you agree? You agree? Okay, so those share price that was driven down by the talking of interest rate increase for the past several weeks should provide you with a good opportunity to buy on dips. Of course, if you are trading with technical analysis, okay, if you need TA as your guide, you will see break above the key resistance and then you buy, a breakout from the key resistance, and then you buy. And I can say Amazon, Apple, and also, let me see, Apple, Tesla, they are doing something. They are doing something that you should notice. What is that? Can anyone tell me? Okay, what is the difference between the three stocks, Tesla, Apple, Amazon, when compared with this Google and Facebook? Now, Facebook record high, around record high level. Google around record high levels. Okay, how about Tesla? Tesla is not at record high level. It is just recovering some lost ground that was lost when we kept talking about interest rates increasing. Okay, how about Apple? Apple is not making record high at the moment. It is just rebounding. Record high is around 145. Okay, Amazon, it is not making record high. It is rebounding to its previous high. So are you confident that they will run back to their previous high? I am. Okay, so that's why we still see upside potential for these stocks. That's why I want you to make a note. Maybe well, I would like to bring you to this angle to look at the stock. They are not making record high at the moment. They are just poised to regain their lost ground, and I think they will be successful in doing so. Okay, so this is a brief outlook on the macro market, on the sector, and on the stocks, big name stock that I would like to show you. Okay, and the following will be another sector within the technology sector that I would like to focus. Why? Because I have received several questions from the audience members. Okay, they all point to one thing, or they point to one sector, or they point to one stock that I would like to talk about. Okay, remember, we are still in the technology stock division sector. Okay, what sector? The subsector is called semiconductor sector. Okay, it is of course within the technologies stock sector. I have noticed this sector for some time. Why? Because every time when I see the technology sector, Nasdaq 100 rise, the semiconductor sector just rise much more. Okay, but every time when the tech sector or the Nasdaq 100 index drops, these sectors drop some more. Okay, so it is quite interesting. And today I will show you what is happening. In fact, what is happening now. This one is also an ETF, SOXX, a semiconductor sector. It is a real US stock code. Okay, it trades those major semiconductor stocks in the US, and you can see here SPX is S&P 500, NDX, the red one, is the NDX is the Nasdaq 100. Year to date, it has advanced near to 15%. As I can say, you can see the tech stock is coming up to the blue chip stocks. Okay, close, and I think I look forward to their overtaking the tech stocks, overtaking the blue chip stock. And 981 is a Hong Kong listed stock, of course, a semiconductor stock. It is SMIC, the biggest Chinese chip maker. So I pointed out because I have received a number of questions on these stocks and also these sectors from the audience members. Okay, and this chart at the moment, I will show you one or two more. This one is shows you what is happening. The chip sector, semiconductor sector, is leading now, even outperforming the S&P 500 and of course the Nasdaq 100 outperforming. So semiconductor stocks, good, doing well. And inside this sector, we have noticed one chip maker, Nvidia. Year to date, it is up over 52%. Is that good? Good. And but our Chinese counterpart, which is listed in Hong Kong, and also it is also listed in Shanghai. Year to date, 10%, 11% growth. Okay, what's happening? What's happening? Let me tell you. So now we look at the winner, the market leader. It has just broken out from it is a bullish continuation breakout. I can say it is up, and then consolidate up again, and it is now tracing the upper Bollinger Band, and the RSI is nearly 80. Okay, very strong. It means a lot of people are getting into this one. Why? Nvidia. Well, in the past 12 months, it has advanced over 100%, doubled in share price. And in the past month, June, up 20%. Its quarterly results are very good, very solid. Okay, chip stocks, semiconductor stocks are very bullish at the moment. Why? Maybe you are also very familiar with the situation, or maybe you have also heard about we have chip shortage nowadays. We have chip shortage in the car making industry. Both some car makers, including Ford or Volkswagen, they are reducing production because they don't have enough chip supply. Okay. Also, you are seeing that the computer, just like the Lenovo computer, Lenovo Group, Chinese company, computer making PC, they are increasing the price of the PC. Why? Because they are experiencing a shortage of semiconductor chips. Okay, because now the pandemic has impacted the supply, the production of chips, and at the same time, the reopening of the economies, we are seeing more and more people using computer, and even during the pandemic time, we are working at home. Children are learning at home. They all use computer, and you know what? Those device, computers, well, software, they all need chips, semiconductors. So that's why we have a severe shortage of semiconductors around the world, and this is why we are long-term bullish on this semiconductor stock sectors. But I have to mind you, this stock, Nvidia, its PE, price to earning ratio, is very high. Its valuation is very high, around 90. And as you can see, this RSI is 80, overbought region. Overbought region doesn't mean that it will fall. Okay, doesn't mean that. But you have to take this into consideration. And if I were you, if you are interested, in the stock, wait to see if it will come back down close to this 20-day moving average. So as you can see, we are long-term bullish on the semiconductor industry and also bullish on this stock. Okay, which brings us to the next one. SMIC, semiconductor manufacturing company, something like this. It is a Chinese company based in Shanghai, and a lot, several, I can say several audience members keep telling me that they are bullish on this one because they think the Chinese people, Chinese engineer will make better semiconductor, will make better products than the West, okay, than the Westerners. I agree that Chinese people are amazing, okay, they are amazing engineers, okay, but you know what? The share price is telling you that there is something they will think twice, okay? What's happening? Do you know that this stock has been in the US government blacklist already? Now, at the start of the year, we think President Biden, US President Biden, will change the relationship with China to the better. Okay. However, we are disappointed because the Chinese-US relations keeps to be very bad. I can say very bad. And people at the start of the year, people thought that Biden will take away those blacklisted companies, Chinese company, and all things will be better. No, I tell you, you don't have me to tell you. He tells you he's adding to the backlist of Chinese companies, not subtracting. Okay, the situation is turning bad, worse. Okay, now the backlist. What is the meaning of the blacklist? It means that U.S. citizens, U.S. companies are not allowed to invest directly into the stock. Okay, not just direct investment is not allowed. If this stock, the blacklisted stock, if this stock is in any index, okay, for example, let's say MSCI Technology Index, something like this, the hedge fund, US hedge fund, US investment bank, US banks, they are not allowed also to invest in that particular index that contains this stock. Okay, so you will see in institutional money cannot jump into this stock, and you can foresee how good or how bad this stock will do in the future. Okay, so yes, I repeat, I agree with some audience members. They're saying that Chinese engineers are top. Okay, they will make very good product, top products to excel the Westerners, the Western company, the US company. Okay, I agree. But if we lack institutional investment, institutional money, capital, it is very hard for us to see a substantial rise in the share price. I hope you will understand what I mean. That's why at the moment we are a little bit bearish on this stock. As you can see, the declining trend line, the red line, is still very intact. Okay, so this is what I want to share with you today in this webinar. I hope that I have not overrun. So any questions or any points you want to raise to tell me?
All right, thank you very much, Ming. We can move right onto our Q&A segment. And our first question for tonight is, with the US and China trade tensions going on, what do you think will happen to the semicon and the oil-related stocks listed in China and on the Hong Kong exchange?
You mean the yes, good question. You mean the U.S.-China relationship, right? I mentioned already. We have not seen any signs of reversing to the better. It means it is getting worse day by day, I can say. I cannot get into details here. Well, of course, as a market practitioner, we have to be familiar what are happening around the world, and I can make a conclusion to you that for the US, not just US China, you can see Australia China relationship, Europe China relationship, not good. And I missed one point I have to tell. Have you noticed that, or do you still remember that we have 3 Chinese stocks originally listed in US? China Telecom, China Unicom, China Mobile. They are being delisted or have already been delisted in the US. And just like the stimulus measures, these 3 are not the last ones, and we are going to see more and more to come. Okay, so I maintain our view that stocks in China and in Hong Kong, we have to treat with caution, because all those political uncertainty is quite high. Okay. Next question,
Okay.
Ming?
Yeah, our next question is, what is your view on Alibaba?
Alibaba. Oh, why not we take a chart, have a look. Okay. Alibaba. Can you see my screen? Ming?
Yes.
Ming? Okay, good. Cool. Alibaba. This is not Alibaba. I point to Alibaba. Chart window. Yeah, good. So I mean that this gentleman is talking about the Hong Kong, right? Okay. Template. We have the webinar. Good. Daily chart. Okay. Good. All right. So technically, we can see that Alibaba has, this is a daily chart. Okay. Blue one is the 50-day moving average. Red one is the 20-day moving average. Not bad, I can say. Let me draw a line. It seems to have, broken above a declining trend lines, and RSI is not stressed. Okay, and most importantly, MACD is turning up. I can see short term, this stock is doing well, will do well, and as I recommend, when I talk about stocks in Hong Kong, listed in China, listed in Hong Kong, I will ask the investor, I will recommend the investor to also look into US China relation and all those, even the political situation in China. Okay, this stock seems to have some trouble with the Chinese government before, but now it seems technically it is turning up. So short term, it should be good. Okay, but yeah, always exercise caution when trading this big tech name in China and in Hong Kong. Okay, Ming, next.
All right. The next question is actually the last question we have received. So if anyone else has any other questions, please send them in right now. Yeah. So the question is actually related to cryptocurrency. Someone is asking, what do you think about Bitcoin and related stocks and Nasdaq like Mara and Riot, etc.?
Wow. Can I talk about crypto? Is that okay, Ming? I can talk about crypto a little bit, maybe a little bit. Well, this Bitcoin and all those related stock, Riot, okay, Riot blockchain, right? And also I know that you asked also about MicroStrategy, MSTR, and also Heartache, and also the which one, Mara, is it Mara from? Yeah, yeah, all those stock miners, they are very volatile. They are very, including Bitcoin price, and it can within a month, as you can see, Bitcoin price within not a month, 2 weeks time, it can lose 50% in Bitcoin price. So this is another category that I will not recommend using TA, technical analysis, to make a trading decision. As you can see, 2 weeks time, it can lose 50%, and even I know that those crypto related stocks, they even lost much more, higher than 50%. So if you are still keen on crypto, you still like crypto, still like to explore crypto, good. If you still want to put money in the crypto, don't put big money. Just put some money that you can lose, I can say, because I cannot. Well, I have been looking, studying those stocks. They are quite volatile, of course. Just like in February, maybe in March, when those crypto related stocks they rose, they surge, it makes you very happy. Okay, you think you are king. Okay, Riot blockchain, they jump just maybe 2-fold, 3-fold in 2 months. But when it go down, when they go down, it is a lot. So do more studies on those cryptocurrency, and put in the money that well, you are prepared to lose a lot on this one. Okay, I mean, just put in the amount that when it is lost, it won't hurt you much. Okay, and crypto, well, in fact, nobody can say for sure how they are going, but I can say yes. If you ask if they are compared to those internet stocks in the 90s, yes, I agree, they have such potential, but beware. And I have seen many YouTubers, YouTube videos saying, wow, the stock price, the Bitcoin price will rise to blah blah blah, astronomical numbers. But I hope you can exercise caution. Okay, so let's talk about well, let's keep talking about crypto. Maybe next webinars. Well, I'm also interested. Thank you.
Okay, the next question we have is asking what the prospect of Hang Seng is in the near future. Will it be bullish or bearish?
Hang Seng, I don't know if, let me check. There should be one Hang Seng here. Any index? Give me some time. One second. I will check if we have Hang Seng here.
Yes, we do. CFD spot Hong Kong Hang Seng.
This one? Yeah. Thank you, Ming. Okay, is it here? Oh, sorry, I lose track of it. Oh, no, it is not. It is Henderson, Ming.
It should be under indices.
Index.
Yep.
Oh, we don't have index here. It seems we don't have index here. Oh, never mind. I have another source, and if you don't mind, are you watching this one?
Yes, we can see.
You can see. Okay, let me check. Hang Index daily chart. Okay. Okay. So now you can see. You can see. We are still below 29,000. 29,000. Hang Seng has been trading in the range for quite some time. Starting from March, it is trading in this range below 30,000. Below 30,000, and I don't see any much upward momentum at the moment. You can see MACD. Okay, you see the RSI just 50. Okay, so I'm not very bullish on this one, on Hong Kong stocks. And also the reason I repeat and repeat, the undercurrent, the political uncertainty between China and US is just put me in doubt of this of Hong Kong stocks. If I trade, I would rather go to I can say US stocks rather than Hong Kong stock. Okay, I just don't like the the uncertainty, just like these stocks, the semiconductor stock. So the downside risk are much bigger than those US stocks. Okay, mind you, I have to repeat, the US are going to delist more Chinese listed share in US, and how they are going to affect those same company stocks also listed in Hong Kong. Well, not a good one, not a good one. So this is my view on Hong Kong HSI. Okay, I hope that this is helpful.
Yep, thank you. Due to time constraint, we will take one last question, and that question is, what is your view on Disney?
Disney, okay, Disney, okay, okay. I think we have Disney stock here or not?
Yes, we do.
On the EFT, CFD, I mean.
CFD, yes.
Yeah, do we have Disney? Sorry, we don't have Disney stock at the moment. CFD. No worry. Maybe we go back also to if you don't mind, I will go to trading view. Okay. Disney here. Well, this is daily chart. Have a look at the weekly. If you are long term, we can see that the MACD. Now this is a weekly chart, okay, and it is going up. The MACD is going up, and also, but the related string index, the upside momentum is not that high at the moment. Okay, let's have a look at the daily chart. Yeah, well, this is there is a downtrend here also. Okay, if you are looking at daily chart, mind this downtrend, declining trend line. We have to see a break above this one to have a review of the situation. At the moment, I don't think it is a very attractive stock for the moment compared to those sectors we mentioned, we study about, okay, just 20 minutes ago, okay, is the technology sector, the retail sector, but Disney at the moment not very attractive. That's what I can say. All right, hope this is helpful for you.
Okay, thank you for the insights, Ming. That was our last question that we will pick tonight. So we will conclude the webinar here. And thank you again to Ming and Dominica, and thank you very much everybody for your time tuning into the webinar tonight. We will be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. Also, you can register for a free Phillip MT5 demo account to personally have a go at what was shared in today's webinar at phillipfutures.com.sg/demo. That's all for today. Thank you everyone and goodbye.
Thank you. Bye-bye.